Dear students, today we are doing problem number 18 from T.S. Grewal Financial Statements textbook, 2026 textbook. So, I'll read the question first. Compute cash flow from operating activities from the following. Profit for the year ended 31st March 2026 is 10,000. This 10,000 we take it as a starting point after providing for depreciation of 2,000. So this depreciation is a non-cash item, comes under OP2, we add back to net profit. And the second point, they have given current assets and current liabilities of the business for the year ended 31st March 25 and 26 are as follows. So they have given few current assets and current liabilities. We need to identify that which supposed to be add, which supposed to be credit. Sorry, minus. So here the trade receivables is in current asset. First identify what is current asset and what is current liability here. Which is current asset, which is current liability. Trade receivable is a current asset. Provision for doubtful debts is a current liabilities. Trade payable is current liability. Inventory current asset. Other current assets anyhow current assets. Expenses payable current liability. Prepaid expenses current asset. Accrued income is current asset. Income received in advance current liability. After then, now you identify this as increase or decrease. Trade receivable in 2025 and 2026 you check. Last year it is 14,000, now it is 15,000, means it is increased. Provision for doubtful debts, last year it is 1,000, now it is 1,200, increased. Trade payable 13,000 become 15,000, increased. Inventories 5,000 become 8,000, increased. Other current assets 10,000 become 12,000, increased. Expenses payable 1,000 become 1,500, increased. Prepaid expenses 2,000 become 1,000, decreased. Accrued income 3,000 become 4,000, increased. Income received in advance 2,000 become 1,000, so decrease. So here we identified the two components. One is current asset or current liability, the other one is increase or decrease. By using this information, should we add or less, we are going to decide now. To add or less, we have a small technique, it's called, here I am writing beta add for our understanding only, less. This is a hint beta. Write current asset, current liability, current asset, current liability. Always start with the down arrow. If it is down arrow, automatically this will be up arrow, and this will be down, this will be up. So what this hint tells about, if current asset got decreased, we add. Current liability got increased, we add. So follow this logic. So whenever you are dealing with operating items for OP3, particularly working capital changes, add less, write in the rough paper or exam last paper or in the question paper ending if possible. Write with pencil. CAL, CACL, CACL, right? First start with down arrow, after then follow the sequence. So now, so you just whatever here we marked, trade receivable CA increased, provision for doubtful debts CL increase. We follow the sequence. Here you follow this sequence, we can easily identify which item supposed to be add, which item supposed to be minus. Now we check. CA increase means here less. We are able to see here CA is less. So put minus for this. Trade receivables increased, minus. Provision for doubtful debts current liability increase, plus. Trade payables current liability increase, plus. Inventories increase, minus. Other current assets increase, minus. Expenses payable increase, plus. Prepaid expenses decrease, plus. And accrued income increase, minus. Income received in advance current liability got decreased means minus. So here you identified that few minus items, few plus items. Let us see how to record these transactions into the format. Children, here OP1 may one item net profit is given, OP2 may depreciation one item is given. This problem mainly focusing on current assets and current liabilities, means working capital changes. Let's see with the solution. Here you draw the format. Calculation of cash flow from operating activities. This part 2 columnar format draw, and start with net profit 10,000, which is given in the question. Add depreciation. You can see here 10,000 they have given net profit, and depreciation they have given 2,000. The two items we added, We got operating profit before working capital changes 12,000. Now here CACL as we discussed here. First we start with the down arrow, up, again down, up. This looks silly, but this is very most important thing in the examination. Easily we can recollect, but if always we exam intention we may forget. That's why use the logics and small hints also. You can frame yourself how you are comfortable in the examination. Make your own notes, make your own understanding, make your own preparations. Now these items we are taking into consideration. What items we are going to add here? Provision for doubtful debts. Provision for doubtful debts. So always take the difference value only. 1200 minus 1200. Next, add item trade payables. Trade payables. Trade payables how much? 2000. Next, add item expenses payable. Expenses payable is 500. Next, prepaid expenses. See how the job is become very easy when we are marking in the question. So whenever you have examinations, so you half the problem you can do in the question paper, but use pencil. We can erase and rewrite also possible if we found it is mistake. Prepaid expense value is 1000. So that's it. Add items are this only. No, total it 1000 plus 2000, 3000, 3700. 3700 plus 12,000, add 15,700. Now we are looking into minus items. What are minus items we have? Trade receivable. First item is trade receivable. 1000. Always take difference value only. Inventories. Inventories value is 3000. And what else? Accrued income. Accrued income also 1000. Next, income received in advance. Income received in advance is also 1000. Difference. All these are differences only we should take in. So total 6000 I am going to deduct. Minus 6000. 15,000 minus 6,000. Our one more item is missing here. Yeah, I have found other current assets is 2000. Other current assets is 2000. The total of this value is 1000 plus 3000, 3000, 6000, 8000. Total it is 8000. Subtract, put brackets. The final answer we got 7700. Cash flow from operating activities, because we got positive answer. We got the positive answer. Here is the answer. You can cross check, children. So net profit 10,000, add depreciation 2000, operating profit before working capital changes. WCC means working capital changes. Now working capital changes we are going to deal. First we add current assets decrease, current liability increase. Provision for doubtful debts 200, trade payables 2000, expenses payable 500, prepaid expenses 1000, total 3700. This we are going to add to 12,000, 15,700 we got. Here we have few items deduct. Trade receivables 1000, inventories 3000, accrued income 1000, income received in advance 1000, other current assets 2000, total 8000, subtract. So we get the answer 7700. So hope you understand. If you want to repeatedly refer, you can easily understand the answer, and you can